Okay, this week we have had quite a bit of action, especially on Friday, that I think it's important to kind of point out. So if I go immediately to look at the SPY, the S&P 500 ETF, we can see that after probably, I don't know, it's been a couple weeks, we have finally broken out of this kind of, I don't know, accumulation period, and actually went up and filled a gap here in the SPY. You can see that we've been in a downtrend forever. And it looked like we were going to get a breakout back in December, mid December, and then it wound up finishing the day under this trend that we have going down. And so we've been waiting to see whether this thing would break either down or up from where the SPY has been. And I think what we've finally got today was at least an indication. Now, granted, it could go back just and do like this candlestick here did and go back down, into this accumulation zone. Could be a fake, fake out. So we need to get confirmation that it is going to stay above, and it may not. Who knows? I'll show you a couple things here that happened at the end of the day with SPY, but you just get the feeling that the market wants to go higher. And if you look at today, we got a little bit higher volume than we have previously, so this could be legitimate. Um, you know, the volume helps confirm the size, the spread of this candlestick. So I'm hopeful. As far as if you are a bull, that this thing will continue on its way up. If not, it'll go back into this range between 386 about and 277, 278, or 377, 378, somewhere in that vicinity. But I want to show you how crazy it is. It got at the end of today. Um, look at this. I mean, we had to run. We started down in the morning, this morning, and it runs all the way up. Hits a high around 389.20, and then started to make its way down a little bit. Thought it might come back up. We got a lower high here. What's going to happen now? And then we had this waterfall. But look at the look at the wicks on these candlesticks. I mean, they're a huge battle going on between up and down and everything that's going on. So it was an interesting ending to the day. As I watched this, I wasn't involved. I didn't have any type of trade on it. Actually, in this range, I started to pull out for the day and the weekend. But we wound up, finishing above 388.06, which is above kind of what I was, looking for, was a close above 387. So, we're legitimately out of that range. Now, is it a fake out? I don't know. We'll find out, I guess, on Monday or in the upcoming days. So, but I just thought it was interesting how crazy it got at the end of the day. The battle between the bears and the bulls, and I think you can anticipate that this is what we're going to be seeing, as we move on. So let's move from that on to the investor sentiment. Why all this craziness is going on. So this again comes out on Wednesday night. We were slowly but surely leaving the bearish sentiment behind. Still 42% is high. Neutral high over 1 year's, they're saying is 40.6%. So we're still just slightly above that. And again, I like to see the bearishness, because I as a contrarian trader, I like to see people get really bearish, because then it goes the other way. And when we take the look, as we did last week on the call put option ratio, you know, you can almost, I mean, it didn't work out every time, but you can almost predict that the market was going to go up at some point. Then we look at the fear and greed index, where we've moved from fear to neutral. We were in greed not too long ago, but we're making our way back there. I have a feeling we'll probably get knocked down again on Monday, and then some of the data will come out later in the week. That will be the market movers. Let's take a look at the economic data for this past week. We had, let me get back to last week. Okay. We had the ISM manufacturing PMI was the consensus 48.5, came in at 48.4. But you got to remember, even though the consensus was pretty much in line with it, we're in a downtrend definitely in our manufacturing, and purchasing manufacturing index here the purchasing managers index has been at a decline just because we're in line with the forecast. The economy is weakening, so that is just the reality of what we face right now. And look at the JOLTS job opening report. It's somewhat of an indication of, during the course of Wednesday for what happened today when they did the reporting. And again, it's declining, but it still was above the consensus number. And we'll also look here. Well, the FOMC, I mean, it's pretty predictable. They pretty much come out and say the same thing. They'll say, yes, we're going to keep rates up. Yes, we're going to keep them there through the entire year. Whether they can or not, I don't know. We'll find out. But again, I think the market's probably getting a little bit tired of the Fed, doing their thing. There's only so far they can go with the amount of debt that the U.S. has, and Uncle Joe keeps adding to it. So, it's just the reality is there's only so far that the Fed can take rates higher. People are thinking, oh, they'll take it to 10%. Like, we couldn't afford 10%. We can pay the interest on the debt with a 10% federal funds rate. But 5.5% through the rest of the year, I doubt it. But we'll see. They say they are. They lost credibility with their transitory comment about inflation, so now they're trying to see how right we are, I guess, or something. So anyway, and then on Friday today, the payrolls came out, and I have to admit, I was surprised. The reaction pre-market was the market went up, but the minute it went, we went live. I mean, 200,000 was expected. We got 223,000 non-farm payroll, and I thought to myself, okay, well, the market's going to tank. Well, it did. Pretty much after the market opened, it started down and played some puts at the open, and they wound up being nice puts to play, and it went as the market went down. I did not expect it to get its footing, but again, as I mentioned before, just because the consensus is, they've been saying consensus 200,000 for a while here, but it's almost like sandbagging. But you can see that it's weakening. Non-farm payroll has gone from 292,000 a month 5 months ago to this month at 223. So I think, I'm not positive, but I believe that may have been the reason that the market turned around. Even though the unemployment rate ticked down from 3.6% to 3.5%, we have ISM non-manufacturing came out, and that really helped add fuel to the market today. and why it wound up so much. Why we got such a lift is because bad news is good news, and the non-manufacturing activity, expectation was was previously 56.5. Now it's 49.6 this month. So if we just, you can see the drop. I mean, so things are weakening. So this is basically the service sector, non-manufacturing, and the country is made up of the service sector, and we'll see how the Fed reacts with regards to some of these other data, other than just payroll, that we have out there. If we were to look at next week, then the big thing is going to be, I anticipate, I think Monday the market will probably go on. And that's a wild guess. I have no insights. Don't bank on it. Always look at price action. But we might get a little lift. The mortgage rate, which I didn't cover from last week, went from 6.34% to 6.58%. And so that was an increase. And I expect that number start to go back down, and I'll get to that in just a second with regards to some of the other market numbers. But the big one will obviously be CPI on Thursday. It's been coming down. We need something in the sixes. The consensus is 6.5%. That would be a big leap down from 7.1. And I think if it's even just in line, people will, we've gone 9.1 to 8.5. That was 0.6%, then 0.2% down, 0.1%, 0.5, 0.6. Who knows what the final number will be, but there's definitely some relief in things like the supply chain and different things. So we'll see. The trading economics site that I'm on, they're saying 6.7%, but if it's around the 6.5% number, I think we're going to see the markets react in a positive way. Anything below that, obviously, it'll go crazy. And then we look at the core inflation rate, which is, again, it's just the minus food and energy, which I'm not sure but that's what the Fed will pay attention to. The PCE more, at least they say they pay attention more to the PCE than the CPI. But consensus is 5.7%. We get a number around that. We'll things are definitely cooling off in inflation. Now, I don't think this is going to last forever. I believe inflation is going to wind up rearing its ugly head again in a big way. But for the interim, it's there. And I think this is one of the reasons why the Fed is at least saying they're going to keep the rates, up around, or the federal fund rate around 5.25%, 5.5%, and then leave it there. But we'll see. The Michigan consumer sentiment came out. Let's see. Oh, no, that's next week. So next week, this consumer sentiment will come out. It sometimes is a market mover. It just depends on how different the number is. And it's been pretty much in line. We had this one jump, which caused the market to go down when it went back in, was that in the beginning of December. The actual sentiment was 59.1, and then we had the next month was 59.1. These have kind of been negative things. So this time the consensus is 60. So we'll see what the number is. But we had Christmas and things of that sort. So we'll see. Guess we find out how good Christmas was. All right. Now, let's look at some of these numbers that are kind of driving things. We've already looked at the SPY. Let me go back to daily numbers. Just to kind of mention on the SPY. So we filled this gap here from back in the middle of December 15th to the 16th. And as I mentioned, we tried to break out here, but we left all these gaps behind now. They don't have to be filled. Some people in technical analysis say they have to be filled. They usually are eventually, but it could be years later. But the expectation here is, if this thing's going to go up, first of all, we got to wait and see what happens. Do we get a follow-up? Does it stay above 387? I would say would be the number to kind of look for. And then I think the CPI on Thursday comes out. You come back up here and fill this other gap around 396. Now, a lot of people are saying that's as far as it can go. I don't know, but that would be the next place to look for if we do clear this area and we don't go back into this pit and slosh around for another 2 weeks. But the candle itself is fine. It's had some volume on it. The craziness at the end that I showed you in the final minutes was a little nutty, but my expectation would be that if we can stay above 387, then we can look for some positive news coming out, hopefully of the CPI on Thursday. And then, I think we'll start to see some of the mortgage rates go down. You can see that today we finished at 3.567%. Now we've been low, got down to 3.4. I'm still looking, different breaks here. 3.29 maybe. I don't know where that number one came from. But I'm going to delete that. But next aim would be to see if we can get below 3.418%. But we got the lower low here. We got the lower high. We need to break through this 3.418% to print another candlestick below this lower low here and make even a lower low. And I think it seems to be headed there. There's obviously some momentum around this particular candle, and we'll see how that plays. And along with, this is going to, because this has gone down, I would be expecting next week the mortgage rates to go down a little bit too. Then the DXY, getting a little concerned once it hit over 105. Now we're back below it, and we're looking at maybe the next point of resistance being, I don't know. There seems to be a lot of support here around this 103.804. But, something to keep an eye on. If the dollar gets stronger, then that's going to affect the markets in a negative way. And if it continues to go down, you can look for the market to go up. Same thing with the interest rates. If the interest rates continue to go up, it's going to be negative for the markets, especially tech. Tech is really sensitive to the markets. We've lost a little volatility. Finally broke at this little triangle here. And, whether it stays in there or not, we had a couple potentials on the upside. But I'm looking for it obviously go below 20. You start to get options get less expensive at that point. And then 1904 looks like the next spot, maybe that we can get below. Crude for the week just kind of hung out. It didn't really, we had that break here from this trend. And, and then it just kind of bottomed out, and it seems to be staying in this particular area. I have, we're obviously in a downtrend. I mean, from year to year, all the way up here, a series of, it started to look like it might break it back here in October, higher, a little bit of a higher high, a higher low. Then it just kind of petered out up here. And then we started to make lower lows and lower highs, and kind of jigsawing our way down. What else do we have here? I talked about the put-call ratio. I mean, remember when I talked about this back right after Christmas, or right before Christmas, I believe. this particular put call ratio being this high, more puts than calls, and I mean this is really high. I mean you have to go back a ways to find this might have been in March of 20, March 9th of 20. So back after the pandemic hit, we had this reaction. So it just was very over, too many people negative, too bearish, too many puts, and so now we have things kind of evening out. Even though anything really over zero point 0.7 is considered to be, people are pretty bearish still in the market. I think that's really it. And, my final comments are really, if we could just talk about crypto for a minute. We've had all these negative things happen with crypto. I've only invested in crypto by virtue of momentum plays, down and up. I thought it was getting a little frothy up there around 65,000. I sold some puts, so I profited that way. I've never really owned Bitcoin per se. I'm just playing, more shorting or, immediate longs in it. And it's one of those things. It's a tough one for me because I like the idea of crypto. I like the idea of having something outside of the banking system because we know that fiat currency is it's led us to kind of the disaster that we're going to see. At least I believe we're going to see upcoming, and we need something else. Now, central bank digital currency won't work. It's just more fiat. It's more control. You want a social score for your whether you can get your money or not. Well, you said something bad on Twitter, and we know the government's involved in it. So I like the idea of crypto. I don't like the idea that it's air, that there's nothing backing it up. And this is one of the reasons I will be a big proponent of gold-backed, blockchain type of thing, where it will have gold, but it's being transacted in these centralized areas. I don't know how that would look at this point, but just having electronically gold shifted from one thing to another. When we went off the gold standard in 1971, it's led to a lot of chaos, a lot of games played, and I think you're going to need something outside of it, and gold is one of those ways to. It's been around forever. I mean, it's talked about multiple times in the Bible. It's one of those things that, lack of a better term, to me, it's God's money. I mean, it's got value. It's hard to mine, and unless we discover some meteor with 100 billion tons of gold on it, then it's and then we might at some point, but I don't think it's any time in my lifetime. We'll start to find other deposits. Still has to be mined, right? Even if it's in space, you have to build a rocket ship. You have to go there, and if a meteor hits us the size of what it would need to be in order to affect the gold price, then we're probably extinct anyway, like the dinosaurs. So there's a whole series of costs people are always talking about and talking down. So I'm more of a gold fan than I am of crypto. I don't see what the value proposition really is of crypto in its current state. Backed by gold or silver or something else, then I think we've got something that, leveraging that infrastructure makes a lot of sense from my perspective. So that's what I wanted to cover this week. And remember, there is always a better way.